Hey guys, Boris speaking Forex. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, Kiwi dollar, June 24th to June 28th, 2019. Story in the COM dollar land is kind of the same story as everywhere else. It's been a strong anti-dollar week, so the COM dollars finally came back. I mean, it's a yield differential story, of course, because as U.S. yields creep lower, the COM dollar yields look attractive. But it's a relative race to the bottom at this point. Everybody's rates, RBA is cutting rates, RBNZ is going to be on tap this week. That's going to be the big event in the commodity dollar land. The story, interestingly enough, I think, is that the BOC is the one lone bank out there in the G7 universe that may be forced to not cut rates because the inflationary pressures in Canada are a little bit stronger than anywhere else, and it's certainly getting a big boost out of the jump in oil revenues that the market is seeing at this point. So tensions in the Gulf are positive for Canada in a sense because oil is trading back up now to, where am I, 50, almost 57.5, practically 58. Anywhere above 50, certainly better for Canada. But, it'll be interesting to see. I do think we've had, technically at least, a very, very strong move in the loonie that's probably going to get adjusted the other way, and it could be some relative strength trades or mean reversion trades, rather, that I should say, that are going to be setting up in the COM dollar crosses, which I'm going to take a look at in the crosses section. But in the meantime, as far as the COM dollar levels go, they've moved up a little bit. Aussie now is a 69.70 trade. Caddy certainly dropped very, very hard, but that 32 has been a really, really big support level. It held, although the really, really strong support in Caddy is the 31s, and that's where I think if you're going to trade against the move here, that's where you're going to be putting your stops at around the 31s. 34, the resistance to the upside. And Kiwi, the most hesitant of all at this point, because the market, I think, is on tenterhooks about the RBNZ. They're not sure. Nobody's expecting RBNZ to cut at this point, but it's not impossible that they won't, or that they'll really suggest strongly that they're going to go down to 125 versus 150. Data out of New Zealand has not been that great. Although I wonder. I mean, I think all the global central banks hate the idea of cutting rates at this point because they want to save their arsenal from truly crisis situation. And they feel right now it's just the markets are bullying them into perhaps cuts. But given what it may, it looks like RBNZ is going to be the big event this week. So let's take a look at the calendar here. Here's the calendar for the COM dollar land. We have trade balances. This will be interesting. Ahead of the RBNZ, we get a little bit of New Zealand data. Kathy is really bearish this, by the way. So maybe that will just add salt to the wound and push the Kiwi even lower as we go forward into the RBNZ on Tuesday. It could be a really interesting setup here as we go. Then RBNZ, of course, is the front and center on the COM dollar land. And then we really don't have anything, I believe. There's just nothing on the calendar until... Oh, no, we don't even have Canada. I thought we had Canada, but we don't. There's just nothing over here of any imports. So it's really just the front of the week, and then after that, we're all going to be focused on the G20 and just see how that plays out as far as risk goes. So yeah, it's literally just New Zealand taking center stage this week in the COM dollar land. Let's take a look at the charts here and see how it goes. We can take CAD first because I think dollar CAD is most interesting. So here, dollar CAD, very, very strong. 3 days of price action. We tapped the 32s. It came back up above off the 32s. To me, it's a classic dollar CAD action where you get 3 or 4 days of very, very strong moves and then a slow but steady retrace back up. So I think there's the scope here for us to move certainly to 33s over the next couple of days as you get the classic flag pattern in dollar CAD as everybody comes back and short covers the move. We'll have to see. As I said, there's very little catalyst here, so things could change. To me, the critical thing here with as far as dollar CAD goes is if we what was the low over here? We did 3150. Yeah, we did take out the 3150 in the spike lows. That is possible to be retested. The critical thing is I don't think it's going to be, if it's broken, it's a much more powerful positive move for the loonie and a move all the way down to 31s and possibly even 130s. But I think at this point you trade against the lows of 3150. If you're looking for the mean reversion trade in dollar CAD, you trade against the lows in 3150s, looking for a trade back up to the 33s as far as that goes. Aussie dollar looks halfway decent. Aussie dollar would be really, really bullish if we could close on Monday or Tuesday through the 20s. If we close the 20 SMA, it still looks very good. We've got a nice W bottom here, but it's possible for us to trade back perhaps down to 68, 68.75, somewhere around there. I think the lows here at around 68.30 is certainly very, very solid. It's a double bottom low, and unlikely to move really sharply down unless we get some very, very negative news out of G20. Let's say, Z and Trump don't even talk to each other. That creates really, really massive risk off flows, and I think that could really hurt the Aussie to the downside. But other than that, technically, it still looks very good as a bottoming out trade. But you'd love to see the Monday close through the 20 SMA or Monday Tuesday close. Generally, I think the trade here is essentially to trade to the long side with a stop underneath these lows, and see if we can at least squeeze. I mean, the most reasonable squeeze here is towards the 70s. That's really where you're looking, because the 70 is going to be the big resist point here as we go forward. And then Kiwi, much more hesitant price action. You can see very distributive. Actually, you get this spike high, distributive low, and then a very, very short, much lower high made here. We get negative data on Monday. We get the market could get really, really freaked out and start pushing this thing through the 65s and possibly to the fresh lows in the trade. So I think this could be a relative weakness trade here if we get a lot of negative fundamental catalysts as we go forward. That's how the COM dollar is shaping up. I wish you guys best of luck, best trading. Boris Schlossberg, over and out.